Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be talking wages journal. Wages journal. Did you know that the overtime rate for wages is usually above the normal rate? Here are the lesson objectives for today's class. By the end of this lesson, you will be able to understand what are wages. You will also be able to prepare wages journal. You should be able to post from the wages journal to the general ledger. And then we will record wages in the CPJ. From the previous lessons, you should have this knowledge, the preparation of the salaries journal. We have already done the preparation of the salaries journal. We have also done the preparation of the cash payments journal. Remember, the CPJ. We have also posted from the journals to the general ledger. We will revise some of the words that we have already spoken of. The first one is employer. What is an employer? It is a person or an institution that provides employment to others and pays them for the services that they would have rendered. That is an employer, a person or an institution. Then the second word that you have to remember is employees. What are employees? It is a person employed by the employer and is paid for the services that they would have rendered. Thirdly, remuneration. Remuneration is payment to employees by the employer. We will now define wages. What are wages? This is remuneration paid to employees on a weekly basis. Very important. So you can't just say wages is remuneration. You have to explain that wages is remuneration, indeed, that is paid to employees, but on a weekly basis. The aspect of the weekly basis must be brought out for you to have defined wages properly. What is gross wage? This is basic wage plus overtime. Then net wage, this is your gross wage less the deductions. This is what our employee gets to take home, net wage. We will explain the differences between salaries and wages. The first one is that salaries are paid monthly, but wages are paid weekly. Salaries are paid by electronic transfers into the employee's bank account, and wages are usually paid in cash at the end of the week. But however, they can also be transferred if the employee has a bank account. Salaries are fixed salary negotiated before the employee starts his job. But with wages, there is a rate that is negotiated before the employee starts his job. So the key aspect is that there is a rate. And that rate can be an hourly rate whereby you are paid per the hours that you would have worked. Or piece rate, that is, you are paid according to the units produced, the amount of work that you would have done. Salaries are usually, there is no pay for overtime. That is, with salaries, there is usually no pay for overtime, but employees can receive incentive bonuses, such as housing subsidies or car allowances. But with the wages, overtime is calculated and is included in the gross wage. Deductions. These are amounts subtracted from the wages and are paid to the employee by the employer. Unemployment Insurance Fund. What is this? This is a compulsory deduction which is paid over to SARS. The next one, pension fund. It is a deduction that is paid over to a specific pension fund, a deduction. Thirdly, pay as you earn, payee. Tax paid by the employee to SARS. Tax paid by the employee over to SARS. Medical aid. This is a deduction from the salary that is paid over to the medical aid fund. We will now move on to contributions. Contributions. What are contributions? These are amounts paid by the employer over and above what they would have paid as wages. And here are contributions that a company can make. UIF. So this is the employer's compulsory contribution, which is also paid over to SARS. Then there's pension fund. However, this one is an optional contribution that is paid over to a specific pension fund. Then we have medical aid, which is also an optional contribution that is paid over to a medical aid fund. Dear learners, we are going to go for an ad break, and I will see you shortly.